Welcome to Fear and Greed Summer Investing Series, brought to you by Vanta, specialists in compliance-led growth. I'm Sean Aylmer. Lithium has had a tough run lately, with supply flooding the global market, keeping prices of the battery metal down. I wanted to look today at one of the main Australian lithium companies, Mineral Resources. As always, this is general information only, and you should seek independent advice before making investment decisions. Gaurav Sodhi is the Deputy Head of Research at Intelligent Investor. Gaurav, welcome back to Fear and Greed.
Hi, Sean. Thanks for having me.
Before we get to MinRes, lithium itself, why do people still believe in lithium where something like nickel has no friends anymore? Lithium still has some friends.
It's feeling pretty lonely as an investor in lithium. I think that's being very generous to say it has friends. Look, lithium certainly was a very popular investment theme. And we see this all the time in commodities. Narrative drives enthusiasm drives price. And so a sensible investor in commodities needs to look through the narrative and theme and trying to establish what's happening in the underlying demand and supply scenario. Now, when you do that to these two commodities, let's take a look at lithium first up. Demand for lithium is growing about 20% a year. That's still faster than almost any other mainstream commodity. And more important than that, not only is demand rising swiftly, but lithium historically has been sort of a niche metal. So the entire lithium complex needs to grow from being a niche supplier to a very small industry with really small production volumes to being a large bulk supply metal with much larger volumes. And this is going to take many, many decades. It's probably going to take about 20 years to get there. And we're going to see ups and downs. We're going to see ruptures in the market. Because this is still such an infant industry, booms and busts are going to happen in spectacular fashion. So look, I still think there is a pretty decent future for lithium. I was super unenthusiastic in the boom. We've been buying lithium in the bust, and I think that's the way to treat commodities in general and lithium in particular. Now, applying this lens over to nickel for a long time has been known for booms and busts. And one thing has changed recently in nickel, which has contributed to a much longer bust period. And that is that China has invested over the last 5 or 6 years, hundreds of millions of dollars in new processing technology, and they've unlocked a new way to unravel nickel rather. Now, it used to be that nickel, you used to sort of had to dig it out of the ground, and you needed a very specific kind of geology to access and process nickel. There was well known that you could get what's known as laterite nickel ores, which are nickel ores where the geology is very complex and you have to do a whole bunch of science to it to unlock the metal. China has now come up with a simple, effective, but environmentally disastrous way of unlocking that laterite ore. And they found Indonesia a willing partner to put up with the capital intensity and the environmental damage. So a combination of Chinese money and know-how and Indonesian willingness to put that to work has meant there's been an absolute explosion in nickel supply. Nickel demand has not changed very much. Nickel supply has completely been upended. I think nickel has been disrupted, and we're not going to see nickel rise to the same extent it had been in the past. I think this is industry that has been upended.
Okay, so based on that, let's think about investing in lithium. Mineral Resources, it must be close to the biggest lithium company. Maybe Rio will become the biggest lithium company on the ASX 200, but at the moment, is it MinRes?
MinRes is fighting with Pilbara at the moment.
Right.
Pilbara is probably beat them to it, but certainly MinRes is very, very large, yes.
It's had a really rough 12 months, though. And in fact, I think of the top 200, one of the worst performers over the last 12 months is MinRes. CEO issues, governance issues, the whole lot. Where do you think MinRes sits, or should it sit in a portfolio?
Yeah, this is a really important question. MinRes is a business that we've owned, and I've owned personally for many, many years. And for many years, it's been a fantastic investment. This has been a disastrous year for MinRes. There are three parts of this business. There's a mining services business, a lithium business, and an iron ore business. Mining services going splendidly. Iron ore, they've invested a lot of money to improve the quality of that business, and I think that's going to be fine. Lithium has been absolutely crunched. MinRes' lithium assets, I would say, are so-so. They're average. Pilbara has far better quality assets. And so this is going to be a large producer, but a higher cost producer that requires high prices to get lithium kicking along. I think the long-term future for MinRes is probably not as a natural owner of multiple lithium mines, but probably as a service provider to the lithium industry. So I think the opportunity for MinRes is not so much to increase production and grow its lithium mining portfolio. It's probably to separate that portfolio from the main business. And we just need higher prices for that to happen. So there's a lot of asset value here, Sean, but currently with prices where they are, that value is not being realized. And it's sensible that the market should price those cheaply, but in a different pricing environment, I think we'll see the value of those assets change quite dramatically. The rule for resources is you buy in gloom and you sell in boom. That's the lesson here as well.
Gaurav, thanks for your time this morning.
Thanks, Sean.
That's Gaurav Sodhi, Deputy Head of Research at Intelligent Investor. Remember to get your own independent advice before making decisions. This is Fear and Greed Summer Investing Series brought to you by Vanta. Vanta automates compliance for frameworks like ISO 27001, SOC 2, CPS 234 and Essential 8, saving time and money while building trust. Join over 8,000 companies like Atlassian, Dovetail and FireAnt managing real-time risk. Get $1,000 off at vanta.com/fear and greed. I'm Sean Aylmer. Enjoy your day.